Welcome back to Ready, Set, Sold. Happy spring. And Easter is just around the corner. I've never been able to figure out when actually, how that plan is of when Easter falls, if it comes early or it comes late. I think it's about the only big holiday that seems to move around. I'm sure there's good reasons for it, religious and things of that nature, no problem with it. But I don't know. I'm just never quite sure how that works. But whatever your situation is, hoping you're having a fantastic Saturday and having a fantastic weekend. And maybe you're out looking for houses, or maybe you've got plans to list your house this weekend. Good idea. Again, we talked about before in the first segment. I've been talking about this for weeks. This is a fantastic time to be purchasing a home and also selling your house. With us is Joe Harnist. He can return from the first segment. Joe Harnist, he is the president of Harnist Insurance. Been in the business for 40 years, and that's just him personally. Joe, how long has your company been around?
We've been here 73 years, Brian. I actually grew up in the insurance business. My mom and dad started the agency back in 1945, so we've been on East Main Street in downtown Belleville for 73 years. So
that's amazing. That's amazing. And that says a lot, too, about your company and your standards because, look, businesses come and go. But to have that type of a record, basically 75 years, we'll just round it off. I mean, sure. 3/4 of a century. That's amazing stuff. So good stuff. So we've been talking with Joe here, and we're going to be going into another segment. And Joe, you had some other interesting things to talk about also on insurance.
Yeah, we were talking about all the different coverages that are available under homeowners that you can add to it that are all really very important things. You don't want to just get what the bank requires you to. You need to add those things on, but to go into another venue is on your auto insurance, which a lot of times, your auto and home are tied together because you're getting that multiple policy credit between the two. And that can be huge. Your credit on your home, if you write your auto with the same company, is usually around a 25% credit off your homeowner's premium. So that's huge. To try to keep those together to be able to keep those premiums down by doing that. The other thing on the auto I wanted to mention, and we're seeing that, with new drivers, people have their kids coming up, and I just had one the other day where they had, twins coming up, and that's going to get real expensive, but they've got twins both going to turn age 16, and one of the things we try to encourage people to do is look at your liability limits. What liability limits are you carrying on your auto insurance? You got brand new drivers, unexperienced, coming on, which basically is going to increase your exposure to something happening. That's the time you want to look at increasing your liability limits, not leaving them the same, not lowering them to try to save premium, because your liabilities, you're unknown with young drivers and with accidents. You don't know what the courts are going to do or how that loss is going to come out if somebody else is injured and it's your fault. You're better off to raise the liability limits up higher and also raise your deductibles on the vehicles up higher. Use the premium you save by raising your deductibles to offset the cost to increase your liability. Because again, I think your liability, especially with young drivers, is more important than the money on the vehicle. Because you know what you're going to lose if you lose that vehicle. You don't know what your loss is going to be under the liability coverage. That's my
and those are great points. I mean, and I think that what I loved about that is it's just what you're doing is spending your money more wisely, and that comes from somebody like yourself, and not saying there isn't other insurance companies, but I'm not sure about the 75-year mark, but there is other insurance companies out there, but just having that type of working knowledge is really important. So you're using the same money, but getting the coverage you actually need versus what may not cover you in barring disaster.
Exactly. So yeah, and I mean, you can even go a step further, and this brings the homeowners back into it too. You can go into what we call an umbrella liability policy, which basically is a third policy. Sometimes companies will add it by endorsement to the homeowners, but that is another layer of liability. It's usually starts at $1 million limit, but that limit of liability goes over the top of your primary limit on your home and your primary limits on your auto. So say you've got $300,000 liability on your home and you have an umbrella. Once, if you have a serious enough claim and it exceeds that $300,000 on your homeowners, then your umbrella kicks in and you've got another $1 million on top of it. And then the same with the auto. If you're carrying 100 and 300 or 250, 500,000 on the auto, and you have, God forbid, a very serious automobile accident, and you blow through your liability limits, you've got another $1 million on top of that if you've got that umbrella in place. So it just depends on how much coverage you want to be and how well protected you want to be and what your assets are that you want to protect. So.
Well, I mean, the simple thing is when we talk about houses and homes and things like that, I always try to tell people, I know you too, back in the day, when I hear that, I appreciate that, but back in the day we didn't have to do this, and back in the day we didn't have this, and it's the same thing with the housing market. There was a time, which is hard to imagine now, but there was a time when you bought a house, and if something went wrong with it, too bad, so sad, fix it. That's on you. Not on the seller, it was on the buyer. And I think sometimes we've run that situation with insurance too. Times have changed. They just have. Whether that's good or bad, we live in a different world right now, and people tend to want to sue, it seems, a lot more than, quote unquote, back in the day. And so having that type of insurance, whatever that coverage looks like, is well worth it, I would imagine, Joe, versus not having it. And now, my goodness, I don't know, God forbid, bankruptcy or whatever facing you is never a good situation. Yeah.
There's a lot more exposure out there these days than there used to be. Like I said, I've been doing this for 40 years, and I've seen a lot over the years. I've seen a lot of things change, and I've seen a lot of claim scenarios over the years. So my big belief is the higher the liability you can carry, the better off you are. Buy as much liability as you can afford, because that's the unknown. So,
and that's what everybody's worried about, and that's good stuff. Hey, we're going to be, I talked with Joe off the break. He's going to be coming back for our fourth segment, but in the next segment, we're going to be talking about, as far as it's a hot market, but still be careful with the updating. Most sellers don't go too far with it, but there's a few out there that do, and I've got some stories to talk in the next segment. And then Joe Harnist of Harnist Insurance will be coming back with us on the fourth segment. You're listening to Ready, Set, Sold. I am your host, Bryan Vogt. Happy spring. Talk soon.